Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Wednesday night for Thursday's trading. That's April 8th, 2010. Traders, right off the bat, what I'm going to tell you is that we have a red Omni on the board. Unexpected, yes, but a red Omni on the board this week. The Dow Jones Transportation Average has fired off a pullback signal. Technically, as far as I'm concerned anyway, looks to me like it's a pullback signal, and I'll show you that in a chart. Traders do not fall in love with the downside no matter what happens, because I only expect a very slight pullback and then back off to the races towards the upside overall long term in the Dow Jones, transportation, industrial, you name it. But for trading on Thursday, April 8th, you're going to get some pullback, it seems. You might get pullback for a couple of days. Again, though, I will repeat, whatever happens, do not fall in love with the downside. Also, I'm looking at soybeans, and soybean has a green Omni for trading on Thursday. Soybeans looking very bullish. Now, traders, I have some charts I'd like to show you. Not too many tonight, but I'm going to show you some charts in the transportation average and the soybeans, and we'll get this video done quick, and I'll get right back to work. So with no further ado, let's look at some charts. Okay, traders, the first chart you're looking at is the Dow Jones Transportation Average daily bar chart, and as you know, it is deemed the leader of U.S. indices. Well, that leader has stayed in this very nice parallel channel for quite some time. It has bounced off the top and has put in what you can almost consider a flat top right here. And we know that flat tops produce market drops, and it seems to have fallen out of this new little support line that's been building recently, because we settled down here below this support, settled down here. So I'm thinking a couple of down days coming our way. Looking at the formation on the Dow Jones Industrial Average and Transportation Average, which is the chart before you, looks to me like a pullback is coming. Then we look at the other leaders like the NASDAQ and the Mini Russell, and both of those look like they want a couple of day pullback as well. So, of course, the next thing we do, if the formation's starting to look bearish, we pull our indicators and we'll look at those next. Indicators are also looking quite bearish for a couple of day pullback in the U.S. indices. However, I will repeat, do not fall in love with the downside. Let's look at some indicators here. Okay, traders, we are looking at the indicators that I like to use, two of the many indicators, I should say, that I like to use on the Dow Jones Transportation Average. This is based upon a daily bar chart, but this is the CCI, or Commodity Channel Index. It is clearly now pointing lower, and its averages are crossing with its percentages, so that is a bearish signal on the CCI. If you look at the RSI, or Relative Strength Index, that is pointing straight down. The market, which has been going up, is now starting to falter a little bit. So the RSI is in agreement with the CCI, and basically 8 to 10 other indicators that you would use, stochastics, moving averages, you name it, pointing in that very same direction, at least for a 1 to 2 day pullback in the transportation average. So here are your indicators. You see that the formation has broken some support. We expect a little bit of a pullback. Again, I'll repeat, do not fall in love with the downside, but do expect a couple of days pullback here in the U.S. indices. Okay, traders, we are now looking at the soybeans. It is the May daily bar chart, the May contract for 2010. And if you were looking at this entire construction of the chart, you would realize that we do have a shoulder over here and a head here, and this is a shoulder as well. But while this shoulder is building, making a larger head and shoulders formation, while the shoulder is building, it seems to be staying inside of this channel, or I should say, of this apex that's growing. So as these lines get closer and closer, at some point these two blue lines are going to come together, and that's when this will finally break out of its channel. At this point in time, however, we are building a big head and shoulders, but we are looking for the soybeans to move up a little bit and possibly get to the upper end of the support resistance lines that I've been showing you here. Or, if you'd like to say, the ascending, descending lines that come together and create an apex at some point. That's what these dotted lines are. That's where I believe we will go. So now it wants to come up here and test this, and the next thing it'll do is come down and test this, and sooner or later we'll break out of this. But for now, let's play within the confines of this little angle that's building and see what happens. Now, with that, traders, I have very bullish looking indicators, and I'll show you a page of indicators very quickly in the soybeans. So let's look at those. Okay, traders, staying with the soybeans, the May contract, and the daily bar chart, you have your CCI or Commodity Channel Index. Clearly, this is a bullish signal right here. And down here, you have your RSI, and clearly that is pointing up with the market pointing up. Slow stochastics clearly pointing up with the market pointing higher. So if you look at all your indicators, you will see that just about any indicator that you pull looks bullish in soybeans for a couple of days at least. The formation looks bullish, so we are going to look to buy the dips in soybeans on Thursday and sell the rallies in the S&P on Thursday. Traders, pull your own charts, do your own homework, look at your indicators, always, always do your own homework before agreeing to anybody's recommendation or trading scenario. So, traders, you see the charts, you see those indicators on the beans, they look great, right? Then you look at the formation and the indicators on the U.S. indices and you go, uh-oh, slight pullback looks like it's coming our way. Traders, don't ever trade without stops. A stop is your best friend. If you're going to take a counter-trend trade, like going short the S&P, which has been in the bull market, you make sure you have a trading plan, you make sure you've done your own homework, and you make sure that you have a stop place, because counter-trend trading is more dangerous than trading with the trend. The trend is your friend, right? The S&P has been going up like this for quite some time. We're taking a bearish trade tomorrow, a sell trade. That is a counter-trend trade. Make sure you've done your homework before agreeing with this scenario. Barring that, however, looks like it does want to go down for a couple of days. Again, traders, don't fall in love with the downside no matter what happens here. And come on down to our site. Give us a call. Come down to the site. Come join us in the free chat rooms. Traders, you can reach us at www.livewithoscar.com. Come to our site. Come in our free chat rooms. Let us teach you how to do analysis like we've shown you here on the board. And at that site for tomorrow, we have a soybeans trade set up and an S&P trade set up. S&P down, soybeans up. We'll see what happens. All right, traders, give us a call at 702-629-4755. And don't forget, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Yeah, very good, guys. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.